Hello, followers of the 4-year journey. This is Bob Lucas. It is April the 24th, 2020. I hope you're all doing really well. I hope you're safe, and I hope your family and friends are also doing well. Well, it'd be an understatement to say that a lot has changed since the last video 6 weeks ago. Clearly, we are in a new normal, for now at least, for this year. Times have changed. I know a lot of people are suffering economically, so I hope you also are faring well given the circumstances. Personally, from a health standpoint, I went through a pretty decent bout of COVID-19. The entire family, in fact, contracted it here in New York. So it hasn't been difficult. It's been difficult here in New York dealing with the lockdown and the effects of COVID-19, both from a health standpoint, but also economically as well. Today I'm going to cover in this agenda here pretty much the COVID-19 impact on Bitcoin and also the markets in general. I'm going to then segue into a discussion on sort of the difference between a liquidity panic in asset classes in general versus, say, a recessionary environment and what that might mean for Bitcoin. This is a question I think I received the most on here when I reached for feedback for generating this video. And I want to talk about this. I've talked about this in the past. In fact, I think it was around October or November of last year. I talked in detail about what I think would happen in such an environment, so that I'm going to kind of repeat a lot of those sentiments there. And I think we're going to find that so far, at least, the way Bitcoin has responded is kind of the response you would expect in this type of environment. The question is going to be, going forward in a recessionary environment, will Bitcoin respond the way I believe it will? I'll also quickly again touch upon, like I do in every single video, the importance of position sizing and risk. Given what we've seen here in the last kind of 2 months here and the response from Bitcoin, but also all asset classes, I think it's going to be an important highlight on why I've been stressing position sizing and risk all along. Then we'll talk about kind of where we are now in the cycle and the forecast. Go back to kind of April of 2019, a year ago, when I did kind of the most important video, I guess, and also go back to the original December 2018 video and just take a look at kind of what the thoughts were back then and as to how this may unfold and where we are today. And then, of course, I'll give you yet again another 4-year cycle update on where I think the 4-year cycle currently stands. That would be obviously a segue from the previous point there on relation to cycle forecast. So enough to cover here, but if you've been following all the videos, all the 10 or 12 videos that I've done over the last year and a half, a lot of this is still the same recurring theme. I don't think a whole lot, to be honest with you, has changed. How Bitcoin progressed over the past 15 months is probably not what I expected and what most people expected. But I think where we stand today, you will find not a whole lot has changed in terms of where we've come and where I think we're going in the future. So let's get into it. COVID-19 was a black swan and a liquidity event that the Bitcoin community and the Bitcoin asset had just not been prepared for, simply because it had never had to experience an environment like that before. As far as I'm concerned, those December 19 lows were going to be the lows for Bitcoin during this period before this black swan liquidity event occurred. The market had consolidated over I think around a 6 or 7 month period here from the June top, where it soared to the $14,000 level. That move to $14,000 was also not expected and took the market many, many months here of consolidation and selling for it to resolve itself. That December low, in my opinion, was going to be the low before we came up into this February time frame, around about where the US and world stock markets began to start pricing in a serious shock and liquidity event related to the beginnings of outbreaks of COVID-19. Of course, that began to accelerate here as infections started to increase, and it became very evident that this was not going to go away on its own, and that the economic impact was going to be significant. Then we started to get in here into the early March timeframe, and markets really began to sell off sharply. And as I covered in previous videos, really when it comes to a severe surprise shock in any market, and you have fast changes in price like we saw in the stock markets, for example, and crude oil and other asset classes, you begin to have this delevering period that occurs. So we had a market in general, a world market in general, that was levered very highly, not just in Bitcoin, but across all asset classes. And then as the losses began to pile in and the margin calls began to come in the end, people in a short-term panic, in a short-term liquidity event, do not care in the slightest about any of the fundamentals or any of the long-term prospects of any asset class, especially when you're talking about, let's call it smart money, family money, home offices, institutions, whatever it may be. Holders of large amounts of Bitcoin are also holders of other asset classes as well, and they have Bitcoin as part of a more diversified portfolio. So when one portion of your portfolio is collapsing 15, 20, 25% in a very short period of time, then there's just no way that they're going to avoid not selling down something like Bitcoin indiscriminately as well. One, you can't have Bitcoin then start to be a larger percentage of your portfolio as the rest declines. But two, in that type of situation, that type of environment, the goal and the mantra of any of these money managers is to be defensive first, to preserve, and to raise cash as fast as possible. And that means selling. And when we begin to sell, then the short sellers begin to come into the market as well and begin to see the opportunity on the downside, thus accelerating the sell-offs and the declines. So this move here down here was simply a worldwide panic that Bitcoin was just never going to escape. When you look at the stock market here in the US, we had a 35% decline in just a number of weeks, couple of weeks, maybe 15, 20 trading days at most. That was the fastest decline in such a short period of time in US market history. So if you really appreciate those comments there, you realize the level of panic that was in the market here, and it's only natural that we would see Bitcoin with its leveraged markets begin to sell off the way it did right here. Therefore, given Bitcoin's relatively high beta and relatively high historical volatility, to see the equity markets collapse by 35% is historic in itself. So therefore, to see Bitcoin drop from the highs here in February down to the bottom of the wick 60%, double the decline of, say, a traditional broad market like the S&P 500, this is very normal in relation to the decline you saw in the stock market and other markets as well. You look at crude oil more recently dropping from a $50 price down to 20, and then of course we all know just this past week the forward contracts going into negative territory. It just goes to show you the level of selling that's around here, and Bitcoin of course did not escape any of that. So when I look at this decline here, I don't look at it from a fundamental standpoint. I don't look at this saying the 4-year cycle is broken or Bitcoin is broken because it collapsed by 62%. Bitcoin has a massive history, a documented severe history of doing crazy things like going up by 300% in 2 or 3 months, or by dropping 30 and 40% in just a given number of days. So this here again, to me, is purely black swan liquidity, panic related, as we saw across all the markets. And now it's just a matter of time for the market to recover, begin to rebase, and then to begin to then slightly or slowly move back into more of a fundamental picture, as opposed to it's a recent liquidity event that it underwent. And here now in the short term, I'm not here to predict short-term prices. I've said that in every single video, but I do think the lows are in. I think we had massive volume here, larger volume than we saw in December of 2018 at that bear market decline and capitulation. This is true capitulation across the board, and maybe this is something that the Bitcoin market just needed to go through itself. Since then, we've done this steady climb up. People like to say it's correlated to stocks. I don't think it's that correlated to stocks in general at the moment. I think obviously everything went down with the event, but right here we are starting to climb this wall of worry. And I think now with the halving coming up, I think there's going to be a little more volatility begin to come in. The Bollinger Bands are starting to get tight. I don't think we pop up to the other side, but if we do, and if we get above 8,300 right here in the short term, there's a possibility, a strong possibility that the market just goes higher from that point and begins to continue that bull market uptrend in the 4-year cycle. But I think we still have to get through a retest of some sorts. Doesn't mean a retest in price necessarily, but a retest, a move down into a 60-day sort of cycle that's kind of due in this time frame here, in this window. I think we also have the halving narrative that's going to bring in a lot more interest around that date. So right now I think it's scheduled around May 12th. Of course that can vary, but over the next 3 weeks or 4 weeks, I think we can get some real chopping action come. But I would be surprised if we didn't head mostly lower over the next month or so into this halving. And it's possible that we even get a good decline post-halving as well as a trap in this market before heading higher. But I do believe that we stay well clear of the wicks right down the bottom of those $3,000 ranges. And I think probably the worst case is more in between the $5,000 and $6,000 range, which is still a significant decline from this point. But this is where I believe in the short term we may end up. Now, the natural question I get from everybody is, well, I should wait to buy. I should wait in that 5,000 area, or I should sell right now and buy in the $5,000 range. And if you're asking that question, you either have not watched a majority of the videos I've produced over the last year, or you've ignored them, because the journey over the 4-year cycle is to get your position to not be too focused on short-term price, trying to save 500 a Bitcoin or 1,000 a Bitcoin or 2,000 a Bitcoin. Get your position, get a reasonable allocation, and begin to focus on the psychological elements and aspects of holding in an extreme volatile asset like Bitcoin over a long period of time. That's the goal, and that's the mindset we need to be in, because if you had that mindset coming into this black swan liquidity event, you would have held through comfortably. And many of you didn't, unfortunately. I know from the messages and the emails and the comments that a lot of people either panic sold or they were liquidated, unfortunately, because they felt that the worst was behind and that the only thing that can happen going forward is price can go higher. And therefore they began to leverage their HODL position, thinking that even just a 1x or 2x or 3x kind of leverage would be fine and be safe. But even a 1x, right, a 50% decline is going to liquidate your account. There's no such thing. There's no point in margin. There is 0 point in margin in a market that trades like it's a leverage instrument to begin with. Bitcoin, with its volatility and its asymmetrical opportunity, is a call option, or behaves like a call option would anyway, right? So you don't need to lever up something that's already behaving and pricing like a call option does. I've talked about that many times before. There's enough potential gain in Bitcoin being in spot that far outweighs any other asset class and its possibility, its potential. So why anybody would want to lever up on something like this when there's a 10x, 20x, and 30x opportunity potentially up ahead for us, and risk liquidation like many people went through, and risk their HODL stack is really beyond me. But that just shows a lack of, I guess, investing knowledge and maturity in this market. And it also shows that people still greedy and not content with being patient and sitting out a year or 2 years and waiting for the potential to unfold. So what could happen here is that we may end up reaching the goals that we've been talking about for so long, and people now either have fewer Bitcoin than they started with, or have no Bitcoin at all, and starting from ground zero again. And it's unfortunate, but maybe it's not too late, right? Maybe this black swan event has given those types of people at least some opportunity to get back in here at what I think is still a very reasonable price. All right, let's switch gears here a little bit, talk about recession and panic. So I think, we obviously went through a panic situation right here recently. And I think that's over. Now, I don't think the stock market is going on to new highs. I think the stock market could be in a bear market. Well, from a price standpoint, it's obviously in a bear market. But I mean, from a time perspective, I believe we could be looking at a 3 to 9 month bear market into 2020, into the end of 2020 for the stock market. But I don't necessarily believe that Bitcoin needs to remain correlated or will be correlated to that. I think Bitcoin's value proposition from a store of wealth is such that it will begin to attract a lot of interest, especially post-halving, from the store of value crowd, and just like gold is. So panic is over, in my opinion. I think we still could see some selling into the next 60-day cycle low as possibly the equity market begins to go lower again. But I think they decouple at that point, and then Bitcoin begins to shine and show its true colors and its value in an environment like this. So in a recessionary environment, hedge-like assets tend to do really well. Just like gold does exceptionally well in bear markets, I believe Bitcoin will prove itself, and possibly out of the next recession and the next equity bear market, Bitcoin will earn its badge here in being a risk-off, a hedge-like asset that performs well in a recessionary environment. I do believe that, and I believe it's going to follow a similar path to what gold did in 2008 and what it's doing right now as well. We also have the perfect backdrop here for Bitcoin to perform and outperform, with central banks around the world essentially, doubling their balance sheets, committing trillions and trillions of fiat currency here to backstop the world economy. You also have governments here printing up a massive amount of deficits that really can't be funded by the public and by sovereign wealth funds. It can only be funded through the purchase of assets through the central bank's authorities. So essentially, we're increasing money supplies, we're increasing deficits, and that is the perfect backdrop for something like gold, but also is the perfect backdrop for something like Bitcoin, where you consider it's still only a $150 billion market. I mean, that is just an insignificant number for Bitcoin. It just pales in comparison to anything else out there. I mean, the US government alone is throwing out almost weekly now $300 and $500 billion stimulus packages. There was a $50 billion package just for hospitals the other day, or $75 billion, and there was one $25 billion package just for testing here. So when you compare the size of the Bitcoin market to the amount of liquidity, the amount of capital, the amount of money printing that's going on out there, I just think it's a very natural step to look at a lot of those funds beginning to flow significantly into Bitcoin. And if you need an example of this, here's gold from 2008, 2009. And if you look at here, the 2008 decline, gold was doing really well leading up to the financial crisis of 2008. It was beginning to price in the risk in the market well and truly before it occurred. And if you look at what gold did more recently, gold's already been in a 4-year bull market. It's been foreshadowing what is ahead, or what's occurring right now in the economy, in my belief, just like it did here from 2006, 2007 with this massive run up to the peak. But then you began to have a panic begin to settle in and liquidity event. And where you think gold would do extremely well, of course, any asset does not do well in a panic, just like we saw more recently. And gold fell 33%. And gold's nowhere near as volatile as Bitcoin. So you can understand here, if Bitcoin was around during that time, I think you would have seen something very similar as well. So we had this 33% decline into October, which was really the peak of the panic. I'm not sure if many of you were around, but I certainly was. It was an end of the world in terms of financial markets in 2008. And then right here, gold wicked all the way down to $680 from a 1,000 plus print. But something interesting happened then. The stock market went up and then went down into a March 2019, made a new low, but gold decoupled and decoupled significantly. Even though the equity market continued to fall and fall hard, by the point that the equity market bottomed right here in February or March, gold had gone up to rally by another 48%. So it had come up and almost recovered all of the losses by the time the bear market had ended in the equity market. So it started to price in here, okay, that the liquidity event had ended, the panic had ended, and it just went off at that point and did not look back. And then, of course, began to price in following QE and all the QE1, QE2, QE3, and all the other programs, central banks around the world, including the ECB and the JCB. All these central bank institutions were very much active at that point, and gold benefited from that. And I don't see central banks stopping right here. I don't see world government stopping in terms of their accommodation to the markets. And therefore, just like I see gold now entering or has entered a new bull market, but I see it going higher, I think Bitcoin is in a similar position right here to where gold was back in 2008, 2009. And in addition to that, if you look at gold right now, more recently, so here's the panic. So gold also did something similar where it peaked right up here at 1700 and fell 15%, but has since recovered. So it's gone on to make a new high already while coming off this liquidity event. So we had its mini liquidity event here, had its sell off, and it's come on now to make new highs. So I think Bitcoin is going to be hot off the heels on sort of the similar performance to what gold has done. Okay, let's switch here now to position sizing and risk. I cover this in every single video, and I cover this for a very important reason, because I realize a lot of listeners don't necessarily have the experience in investing in an asset class like this, and they get caught up. And a lot of the reason why they're involved in Bitcoin and crypto in general, let's face it, they may tell you that they love the technology. I'm sure they do to some extent, but a lot of people here are really in it for the speculation and for the potential riches, right? They think they're going to get filthy rich out of crypto, and the reality is a lot of people have lost a lot of money, or have lost whatever money they have, whether it's just trading leveraged Bitcoin, or whether it's trying to take advantage of the ICOs or the altcoins. And without experience, without trading and investing experience, no asset class is going to be easy to trade, especially one with the type of volatility that we're talking about here. And it's a shame, unfortunately, and I know many of you who have been following here did not fall into that trap. And if you didn't, and if you're patient and disciplined and kept your position size relative to your wealth at a very reasonable level, then there was no reason to panic. There was no reason to sell. Again, unfortunately, I had a lot of comments, a lot of emails, a lot of tweets, for example, on people panicking and selling at the bottom, capitulating, or asking me when in 2019 it started rallying up to 14,000. I'm buying now. Should I buy now? So, people are still leading with their emotions. They're buying too high after a surge, and then price they're buying too much and they're leveraging up, and the market is punishing them on the way down. And people don't learn. A lot of people don't learn from the fact that they're doing it in the opposite way. I know there's a lot of market cliches out there about buying blood in the street and so on, but it's true. If you believe in this asset class, you have to keep your allocation reasonable, because again, it trades like a call option. If we're looking potentially at six-figure Bitcoin price, and Bitcoin right now is at $7,000 range, you're still talking about a 15 times return, which is unheard of. I keep stressing this every time. It's unheard of in any asset class to have the potential for a 15x return. You don't need to have more than 5 to 10% of your portfolio invested. Again, if you're young and you've got less to lose, sure, you can put in more than that. The point is, though, the more you have, the more sensitive you will be to price volatility. If you have $200,000 worth of Bitcoin and your wealth is $300,000, for example, and you have well more than 50% of your wealth tied into this, and you think you're going to be getting $3 or $4 or $5 million out of this because you're looking at a 10x or 20x over the next year or two. The problem with that is when the market capitulates like it did recently by 50 or 60%, it's just way too painful to see almost half of your wealth disappear as the market is crashing. That's just human nature. What you think you're going to be able to handle during normal times is not the reality of what you're going to be doing and the way you're going to respond during a panic. This more recent decline for me, and for many of you I know, was simply an opportunity. I ended up adding more Bitcoin, another 5 Bitcoin, at the 4,800 level. Now, do I know if that's going to be the bottom? I don't. I really don't. I think it is. But my point is that the market was down 60 or 70%. I believe in Bitcoin. I believe in the long-term narrative and how successful I believe Bitcoin will become. And therefore, I was okay with making a long-term purchase because my overall allocation to Bitcoin allowed me to take on more risk. Okay, and couple that with my initial purchase back in December of 2018, again, when there was blood in the street, the average price was low. Now, I did make another purchase more recently over the last year or so. I purchased at 9,600 in September 2019. In hindsight, that was probably not the best buy. But looking back at that, I think it was still okay, because it had come off a $14,000 price over a 5 or 6 month decline in consolidation. So my thinking there was that we're in a 4-year cycle bull market. The market's come back 40% over a long period of time. It wasn't necessarily blood in the street, but it was a price point that I was happy to take, knowing that I'm not going to be thrown out of position. I'm not going to capitulate if or when it declines. And it did decline down to 3,000. That position was down by more than 50%. But again, my position was reasonable in size that I could handle and weather that. And that's exactly where I've come, and that's exactly what I've done with that. Not looking to add any more here, but my point here is on position sizing and being realistic with this 4-year journey and your size and allocation. Let's move on now and talk about where we stand in relation to the original forecast, and kind of that would be then a segue into this, an update on the 4-year cycle. I get a lot of messages about the 4-year cycle and whether it's busted or broken. You concede that it's over or it's done. And the reality is, no, I mean, I think we're right on target. I mean, the problem that we face, or not me necessarily, but some of you, is the move that we had in 2019 to 14,000 was out of character. Bitcoin had not displayed a similar type of price action over the last 10 years relative to where it was in the cycle. And that threw a lot of people off. It also threw me off. I didn't expect a move up to 14,000. And nobody knew where that was going. At some point there, it looked like it just may go on to make all-time highs and just keep going. Could have been a big blow off top. nobody knew, and there's no way of nobody knowing. And I think that fooled a lot of people. And it's also a reason why we've now seen a 9-month consolidation. It's just taken a very long time to consolidate the gains that we saw over that short period of time. Of course, I'm talking about this period right here from April to June, just a 3-month period where it broke above what I believed would have been significant resistance here at that sort of 5,500 level, kind of where it began to capitulate in 2018. When it broke through that, it didn't look back until it peaked right here on mass FOMO. This occurred too early and too soon after the bear market, and this is why we saw this somewhat gradual, at least by Bitcoin standards, gradual retracement all the way back and to what I believed would have been the end of that decline. I thought here, and I still believe right now, that this here was the beginning of the next phase until we saw this black swan liquidity event with COVID, bringing it back down and coming back to test kind of this area right here. Capitulation, massive volume, and again, this is where we stand right now. But how does this change, or how does this compare to where I thought back in April right here as we started surging? When this market broke out here in April, I made that video, which it has the highest, my highest rated video in terms of view count was the April 2019, the next 4-year cycle. It has officially started. And that breakout here was significant, and I think was the confirmation we were looking for that the bear market was over. And in that video, I kind of talked about where I thought Bitcoin would go over the next year and 2 and 3. And I just want to show you a couple of videos here from that April 2019 that I think sum it up better than what I can do right here. So this is the video from 2019. We come up and we kind of start testing this area a few times. Now, I don't know if we can get above that period, about that 6,000 point in 2019. I've got to be honest with you, we've got to be patient here. It takes time to build a solid foundation and a solid base in any new 4-year cycle. But at some point, we probably do get above this $6,000 level. And once we get above that, we may drop quickly back down, but then we get it back above, and then that same level begins to act as support. Okay, so here's the chart now. Notice the price, 74, 7,500. In that video, I kind of talked, and it ends in April of 2020, that clip. Price was 7,500. So essentially we're right around the point where I thought a normal 4-year cycle would be at this point in the cycle. So if you're looking at 1 year forward, the cycle's not busted in any way. The price is exactly where I thought it might be. The difference is the path that it took to get to this point. It's given everybody a really big lesson because it trapped everybody here early up into this bull market high right here. Nobody really expected to move so quickly. And I didn't, of course, because in that video, I clearly showed a path up to what I thought would have been some significant resistance, and then kind of a move back lower and building of this base below this 5,500, 6,000 area before finally moving up to this point and then beginning and continuing on in that bull market uptrend. So the only difference is really this move here, and of course the capitulation black swan event that I've talked about today. And this is why I continuously talk in all my videos about the need to not worry about short-term price or even intermediate-term price when your time frame is something like a 4-year cycle. If you're a trader, then obviously this matters 100%, right? This is what you're trading. You're trading daily and weekly bars like this. And you're taking advantage of this swing. For my trading account, I took advantage of this move here. Was leveraged long on trading accounts all the way up and to some extent on the way down from a short standpoint. But that's not investing. When you're investing, you don't allow these short-term moves to dictate how you behave on a long-term time frame. You have to take each time frame and invest or trade on that specific time frame. But too many people were looking at the 4-year goal, but swayed by these moves, both on the upside and on the downside. And again, position size plays a significant role in how you respond to that. So here's another clip on a decline back to retest. Now, this is, of course, Black Swan related liquidity, but I still think it's relevant because I did think at some point we would come back and kind of do a retest of this area like we've seen in previous bull markets. So even though this was a liquidity event, we may have potentially seen some type of similar event occur anyway. It's hard to say. But here's a clip also from that April video. Don't know, but let's just say for argument's sake we get up here and we test. That would just be the first test. I think at some point, and I'm just going to draw this in again loosely, right? At some point, maybe around the August time frame, we get down, and I don't think we get anywhere near necessarily the December lows. We probably get closer to the February lows, okay, around about 33, 3400. Again, arbitrary numbers I'm throwing out. It's more about time. So I think we get down here and we scare the hell out of the longs. They get worried that it's been kind of 7-8 months since the low. It's taken too long. It's now reversed lower. They start to panic. They're too leveraged, and of course, they bail out. Okay, in that last video, I talked about 33, 30, 34, 3500, and we did come down to 3800. So I think this is our big retest here, and it's the capitulation event that we didn't necessarily see in this new 4-year cycle. So obviously we had the bear market capitulation, which ended that bear market, but we didn't see any type of massive shakeout or retest throughout this past 15, 16 months since the 4-year cycle began, and I believe this is it. Sentiment right here became, and it got to an absolute extreme. This capitulation event was real. It flushed out so much of the retail. It flushed out so many of the leverage players. And it really reset sentiment all the way back to bear market levels and beyond, if you look at that. There really hasn't been any real mention of the halving. I mean, the halving narrative was huge last year, towards the end of last year. I mean, it's 3 weeks away, and nobody, I mean, I'm not going to say nobody, of course people are, but you would have thought by now it would have been halving, and it's not really the case. But also, Bitcoin's not getting mentioned in general and across the financial media space. And you see ICOs are pretty much dead and gone. Nobody's launching anything. Even the scammers seem to be gone. Nobody's replying to those automated bots with Twitter, like looking for funds. That's all kind of gone. I think it's just reflective of the flush out that we've seen here. Maybe that was much needed in this market to allow this market to now begin to reinflate here and to move higher. So I think everything is now set up really well. One, we've had this sort of second bear market within a 4-year cycle, so a cyclical bear market within a secular bull market. We've had the flush out. Miners have been sort of somewhat flushed out as well. Sentiment on the retail side has been flushed out. Now you have the perfect position in the 4-year cycle. I showed you in the video where you have kind of a 1-year period of building a base. I believe 1 year's out, 13, 14 months out now, we're kind of at that point. And you also have a macro backdrop that is perfectly suited for Bitcoin to begin to show its true value right here and to attract a bid. So I think everything is still set up. I'm still as bullish and as confident as I was starting this out. And I think for those, again, who have been patient and have shown discipline, they're actually being rewarded right now. Think about where crude oil is. Think about where stocks are in general. Even now, down 20%. They were down 35%. They're down 20%. Bitcoin is up 130%. But even a conservative portfolio allocation, like I've been showing you here, is up over 60% during that time period. So it's still outperforming overall, and it's still doing really well. But I guess people don't see it that way based on where sentiment is today. And that's because they've been going about this the wrong way. Again, buying the highs and selling the lows, just like I showed last time in previous videos, where retail gets excited when price is doing well, when everybody supposedly is making money and you're not. That's when everybody jumps in. Few people get out at the top. And this was, again, I think a repeat here. So this entire structure here has really been max pain as far as I'm concerned. What I mean by max pain, it's been difficult for bulls and even bears alike to profit and be successful in this. Now, there's a lot of short-term traders that I know have done really, really well, but that's a different ball game. That's a different animal. From an investing standpoint, the only thing that's done really well is to be disciplined and patient and taking opportunities of price in this lower sort of area, anything kind of below the 6,000 range, to be buying in those areas, or even to be buying, like I said, after a significant decline over a significant period. So kind of, I wouldn't call it dollar cost averaging, because that implies buying consistently based on date, but buying after a significant decline over a significant period of time has also, I think, in the long run will do well. So let's now finally kind of go into a closing here with the 4-year cycle update and take a look at what we could be looking for going forward. Okay, now short term, again, I don't want to focus on short term, but I think we probably get at least some type of shakeout, come down here, and then I think we begin to see capital flow right back into Bitcoin here. I think there's been a lot of accumulation more recently, but I think you'll start to see that accelerate. And if you look at the April video from last year again, I don't talk about new highs above $20,000 until 2021. And I don't see that changing right here. I think that's still the right look for this 4-year cycle. Again, be aware, anything can happen, right? That's the whole point. In the short, intermediate time frame, anything can happen. But I believe we begin to sort of build up a base right here. We probably don't get above this sort of 10,000 level until possibly the summer, so this here. And then we can kind of come up here and begin to maybe look at testing by February, March, April. Again, don't know exactly where. Let's just call it argument's sake in March. And it's not, and it probably will take a little while before we can get above that $20,000 psychological level that mirrors the peak of 17. We may even at that point have another shakeout, a significant shakeout, maybe a 20 or 30% shakeout. Bitcoin shows 30% shakeouts often and frequently in an uptrend. So possibly a shakeout. And as I showed in the last video, or that video from last year, it's really the last 6 to 9 months only in a cycle where the massive gains come in. And that's when the retail crowd finally wakes up and says, oh my God, this thing is going to go. It's made all-time highs. And this is where it gets mass media attention, when it makes those new all-time highs. And from that point is where you start to see the acceleration in the cycle. Now, if we just take a quick look here at the 4-year cycle, the bear market low of December 2018, going 4 years out, puts us at a December 2022 as the next low for the 4-year cycle. If we just then make the assumption that we're going to have that 3 years up, 1 year down, the next peak, or the peak should occur around the 156-week level. Now, peaks in a cycle are really difficult to predict, and really what I'm focusing on here is that next big cycle low of 4 years in December of 2022, give or take 2 or 3 months on either side of that. It's very difficult to predict, but even a 20% cushion kind of gives you a sort of a 20-week cushion on either side. But let's just, for argument's sake, let's say we go up to a top here around the December 2021 time frame. Still not looking then to break all-time highs and make the run to the peak until 9 months before the expected peak. So if you look at 36 bars, which is 9 months, 36 weekly bars from a projected peak here in November of 2021, gets you to April of 2021. So another year before we break out of all-time highs. Again, this is just extremely arbitrary. It's a guide, nothing else. The point is, that the cycle is projecting higher and much higher prices, and that's the opportunity we try to take advantage of. But again, just because we need to at least have some type of framework of expectation, looking at this April timeframe where we kind of break out, this is where it begins to accelerate. You get the mania phase, and then of course where it peaks in terms of price is anybody's guess, but let's just say we get up to this $200,000 level. That's kind of the projection I'm still looking at, the projection that I have really not wavered from, and this is how I would see it playing out. Again, does it consolidate for another 6 months below 8,000, 10,000? That's also possible. Again, as we saw the path right here over the last year varied from what I thought that could happen again over the next year. So, you know, we may see it trail on the bottom, but still by the April timeframe make the all-time high. We may even get a push above the all-time high this year, but then come significantly back in another mini cyclical bear market over 4 6 month period, and then again by April of 2021 be at this sort of $20,000 range. I guess you get the point here, that we're looking at more of a trajectory over time to a point up in here. But I do believe this 4-year cycle will still be right translated, meaning that the peak over the 4-year period is occurring well beyond the midpoint. The midpoint of the cycle here would be around about November, December of 2020. That's the midpoint. I believe the peak occurs in this sort of 3rd year of the cycle, but it could also move into this 4th year of the cycle. It's possible, again, that we have an extremely right translated cycle, and that we come and we peak high into this 2022 time frame, and then come lower sharply into a bear market low into 2022 and late. Okay, that's one possibility. Another possibility here is that we form, I'll just do this in another color. Okay, so from this sort of April time frame, you know, we kind of take a sharper move higher, and then we come and we spend more of a bear market. Okay, but again, my focus really is on this point right here in end of 2022, where I believe the next bear market low in this time frame will occur. And from a price standpoint, I think we obviously retrace a significant amount back like we have in prior bear markets. We may come back kind of that 70, 80, 85% that we've seen in the past. And that gets you all the way back, probably down to that sort of $30,000 to $40,000 time frame, price range. Again, it's going to depend on how high up we go and how long we form the next bear market. And then moving on beyond that, there's a possibility, a strong possibility, if we do get something like this, where Bitcoin becomes a 2 trillion, 4 trillion, 5 trillion market cap asset class, a serious player, a serious asset at that point, that we then go on and see a really prolonged bear market at that point. So the next 4-year cycle from that point, which would obviously extend into the 2026 time frame. So let's look at a date from this point going out another 210 bars to represent 4 weeks, 52 weeks each, of course, going into the next 2026, 2027 bear market low. We may have a situation where we peak very, well, you would peak early in that situation. So left translated, we may come back, let's just say, not as far down, and then go up and make a peak very early in the cycle. Maybe make likely a new all-time high, be the trap of all traps. Okay, so a 2023 peak right here, and then spend most of the next 3 years into, I just deleted what I just did. So again, go up here, a sharp left translated peak in the 4-year cycle, and then spend the remainder of the 4-year cycle into maybe a double bottom with this prior 4-year cycle low or not. And this would then conclude what I believe is a good chance of being a 16-year cycle for Bitcoin, a longer term cycle. There are many asset classes that have 4 and 16-year cycles. Bitcoin, with its halving schedule of every 4 years, fits that profile. We also have some evidence, at least for now, of a 4-year cycle. And every cycle is intertwined with a longer cycle. And at some point, Bitcoin will experience a massive bear market. What could cause a bear market of this nature? Well, I can tell you what it probably would be. It'd be the response from the traditional government's regulatory environment trying to squash Bitcoin. Right now, Bitcoin at 150 billion market cap is nothing. It's not on anybody's radar. Nobody cares about it. But if we have central banks continuously printing, governments running huge deficits, and Bitcoin run up to this sort of 3 to 4 trillion market cap standpoint and gain the type of popularity that it'll get at that point, it will become a serious threat. Why? Because gold is not a threat because it's been neutralized, it's been managed. It's a 4,000-year-old asset class that nobody believes will, well, not nobody, quite a few people actually, but people don't believe it's going to become the new reserve currency. And but Bitcoin being so new, being so digital, being so decentralized is a threat. You can easily contain gold, right? Because of the way it needs to be stored. You can't contain something like Bitcoin with its decentralized nature distributed amongst the users of the currency as well. So there's going to be a threat at this point, especially because I also believe that technology would have advanced significantly by that point, and coupled with its monetary attraction and its adaptability to something like a potential reserve currency, the digital nature of it makes it a threat where you'll get, I believe, a significant response. And it won't kill Bitcoin, but I think it will put it into a 4-year bear market cycle where you get 6 months or 9 months to a peak, maybe a year to a peak, and then you get the bear market, concluding with a 2026 16-year bear market low. So in closing, I hope this has covered many of the questions that were asked. I hope that explains, at least in my view, where we've come over the last 15 months. I hope it reignites the vision in Bitcoin from a longer term perspective, and hopefully this has been a lesson overall in investing discipline for many of you. And also, I hope it reinforces the fact that there are no shortcuts to significant gains, significant wealth. You have to put in the work, you have to put the patience in, and you have to have the discipline psychologically, more importantly, to be able to get to that point where we can realize the gains if it unfolds the way I believe it does. And if it doesn't, again, that's what risk management's about. That's what position sizing is about. You end up, if Bitcoin ends up, for whatever reason, failing to live up to its promise, it's not going to set you back the 5 or 10 or 20 years of hard work that you've put in to get to this point in your life. And if it does get to the promised point, you will still be well off significantly based on its asymmetrical nature of Bitcoin. And lastly, I want to thank each and every one of you for listening. I appreciate if you subscribe, if you could share the video. I do not ask of anything else besides possibly just sharing it. And I also wish that this period of COVID here and world lockdowns is an opportunity to reflect on what really is important in life. And for me, that's family and friends, and essentially focusing back on just the small things in life, the important things. And it's been humbling also for me for that reason as well. So I do appreciate you. I very much do. Thank you. And if you want to leave any comments, I will try and reply to some of them or many of them. But again, once again, thank you very much, and all the best to you.